It's another beautiful Saturday morning, and you're welcome to this week's edition of China Now, where you get the very best of news happening in China and beyond. My name is Makiza Latifa. Let's start the show with the Thinkers Forum, the segment of the show where our thinkers and scholars share with us their brilliant ideas on the relations between China and the rest of the world. Our guest for this segment is Haico Ebbers, a professor of international economics at Nyenrode Business University, who is considered as one of the leading thinkers in the field of EU-China economic relations. Now, in September, the Federal Reserve cut interest rates by 50 basis points, so our guest will ascertain whether or not this will lead to capital flowing back to China and boost its economic competitiveness. He'll also touch on whether or not the U.S. faced another setback post-trade war with China. Let's get started.
I think if you look at the interest rate hike in 2022-2023 was really driven by obviously fighting inflation. That impacted clearly also the change of the dollar, because if you increase the interest rate, then automatically there's more capital inflow and there's less capital outflow, and therefore you see that the currency is appreciating. Now, both elements, the high interest rate and the high currency exchange rate, will have an impact on other countries, obviously. That can be a real economic impact, that, for example, the increase of the interest rate was reducing economic growth in the US, and therefore export from China or export from Thailand or export from Argentina to the US was lower than expected. That's an impact in the real economy. There's also a spillover related to the dollar. So if the dollar is increasing in value, then automatically there is also speculation, mostly in favor of the dollar. That speculators believe that the dollar will increase further, and they are dealing with that, and that automatically has the result that other currencies are depreciating in value, like the Thai baht or like other countries. That may have a positive impact on the economy via export, but it has a dramatic impact if you have debt in US dollars, and your government income is in local currency, and you see an increase in the value of the dollar and a depreciating of your own currency, then servicing the debt is extremely difficult. I would say that volatility is always bad for a country, but also if the country is big enough for the world. So we need a relatively stable interest rate. We need relatively stable exchange rate, and we need to fight speculation, destabilizing speculation, and if that is happening, it will automatically hurt some parts of the global economy. And it is very frustrating that emerging markets, which are already in the perception of speculators, are risky, that they feel mostly this impact. If you look at short-term capital flows, an increase of the interest rate will increase the capital inflow and will reduce the capital outflow. Now, it will increase capital inflow, which means that capital will not go to Argentina, will not go to Malaysia, will not go to Thailand, but that money is flying then clearly to the US. Now, what you can do, you may introduce taxes on capital gains, that you may not leave the country, or the capital cannot leave the country after or within a certain period of time. Or you create such a stable financial infrastructure that you don't see negative speculation. But clearly that is very difficult for many emerging markets in the short term. Now, the advantage of having a reserve currency is clearly that it is relatively easy to spend money and to build up debt, because you don't have to earn money to repay the debt, because you can also print money to repay the debt. And if you are a reserve currency, then of course many countries want to invest in your treasury bonds, and then you can finance your debt very easily. So that's the advantage. There's also a negative side of being or having the reserve currency, and that is of course that a lot of your currency is abroad, is in the hands of non-US entities, and therefore you don't have so much control on that. So if countries are selling part of the dollar holding they have, it will have an impact on the currency value, which you cannot control in a sense. So it is not only positive to have the reserve currency, there are also some negative side steps. So if Mr. Trump indicates
ultimately it kills your dollar and it kills everything the dollar represents, and we have to continue to have that be the world currency, I think it's important. I think it would be losing a war. If we lost the dollar as the world currency, I think that would be the equivalent of losing a war.
We want to make sure that the dollar is dominant. He emphasized the advantages, obviously. But what he is saying is hardly a reality. If I do business with a US company, and I'm a big client of that US company, and I'm buying products, then of course I will say I want to buy in euros. I want to pay in euros, because otherwise I run a currency risk. And so please accept my buying in euros. Then you can translate that directly into US dollars, but that is your currency risk. I don't want to get this currency risk by myself. So if Mr. Trump is saying everything should be paid in dollars, then he's saying that the currency risk is all over the world, but not with the US companies. Now, I'm quite sure that a lot of business will not continue in this case. I think what we will see is that in 2022 and 2023, if you look at the enormous increase of interest rate in the US, that attracted a lot of money, and that money was a capital outflow of all kind of other in all kind of other countries, and that created a burden, that created discomfort, and also it created less funds available for investments. That happened. We saw that, but it is clear that China is not so much dependent on what is happening outside. We are overestimating that always. Also in the West, we think all products are coming from China. So if there are issues related to globalization, China will be extremely impacted. But I think we are making the mistake that we are focusing too much on the export. If we are focusing on the net export minus import, then this net export is of less relevance for China in explaining economic growth. Then the domestic market is much more important. So I think we are overestimating the sensitivity China may have on the global from the global economy. Yeah, being a reserve currency is, of course, what I said, very, very interesting in terms of printing your own money and more or less paying back your debt very easily, in that sense. So that's a huge advantage. The disadvantage is clearly that a lot of money is outside the country, in the hands of foreigners. And that maybe, so not only the money, the debt is not in the hands of US pension funds or US equity funds or US companies, but it is in the hands of sovereign wealth funds or state funds in other parts of the world. So you are losing part of that control. And in the whole discussion, but if you look at the whole discussion in the West about how China is trying to increase the use of the renminbi worldwide, maybe we are overestimating this ambition. Of course, what I said, there are advantages, and it is good to have in a bilateral trade flow, bilateral local currencies. So if you have trade between China and Thailand, it is very logical to use the Thai baht and the Chinese renminbi. There's sometimes no need for the dollar. So in that sense, we see more and more the use of local currencies instead of the dollar. But it does not say, I think, that the ambition of the country like China is to become the country with a huge dominant and therefore the reserve currency. Because what I said, there are also disadvantages. I think the dominance of the dollar will gradually disappear, and indeed, if you look at the emergence of trading blocks, including all kinds of currency swap agreements and all kinds of agreements on the use of bilateral currencies or multilateral currencies in the trading bloc, then I expect indeed that certain regions will have certain financial flows in specific currencies related to that regional trading bloc. Of course, in parallel with the dollar. And not all the regions, like the trading bloc in Latin America, I don't think that we will see in short notice the use of all kinds of Latin American currencies in the trade. They will still use the dollar, obviously. But in Asian countries, there is a tendency to use much more in bilateral trade flows the local currencies. And we will see that. We will see that the dominance of the US dollar in Asia in 10 years from now on will be much smaller than the dominance of the dollar in the trade in Latin America. So you see big differences, and that may be driven by regional trading blocks. In the previous years, the US debt is enormous, is by far the biggest in absolute terms, and that is an issue that cannot continue forever. However, I don't see it as a problem for the short term, and I have a couple of reasons for that. The debt, the US debt, the public debt, is about 100% of GDP. It is big, but it is not extremely big in a sense. Japan has a much higher debt ratio, and there are many countries having a much higher debt ratio. This 100% debt, the public debt as percentage of GDP, you can pay it back if the money you are borrowing is being used in the correct way. So if you are building bridges, if you are building highways, then obviously you can repay the debt relatively easily. If you use it too much for consumption, for spending by the government, which is not related to investments, then you may question mark how much longer you can do this. But if you invest wisely, 100%, according to me, is not an issue. Furthermore, the interest payments on the debt as percentage of total payments by the government is very small. At the end of the day, you have to repay back the debt, for sure. You have to do it as a private person if you have a mortgage, and you also have to do it as a country, because at the end of the day, there will be a trust issue. But if I look at experiences, how long it take for the stock market to lower the trust of the US government, we are talking about generations, I think. So I don't expect a debt problem issue in the short term in the US.
And that's all for the Thinkers Forum. Next on the show is the Global Arena, which is in three folds today. Let's begin with Yanis Varoufakis, a renowned economist and the former Greek finance minister.
I have to declare that I'm aghast at the collective idiocy of the European Union Commission, which is simply doing as Washington is telling them, slapping, for instance, huge tariffs on Chinese electric vehicles and solar panels, for goodness sake. I mean, Europe is not producing its own solar panels. We need solar panels for our green transition. And we have the European Union Commission, which, because it is being ordered by Washington, D.C. to slap tariffs on solar panels coming from China, is following suit. Effectively, Europe is shooting itself in the foot on command from the United States of America. So that's something else you should be worried about. Given that the greatest lack, weakness, dearth in Europe is investment, there is not a single European country I know that doesn't need investment and wants Chinese investment. So go to European countries like Spain, for instance, you mentioned Spain before, and offer to build BYD cars there, or CATL battery, advanced batteries that Spain is not producing, Germany is not producing. There will be a backlash from Washington. Washington will go to Brussels and say, don't let the Chinese come in here and invest. Because you have to remember, in Brussels there are two international, transnational organizations. There is the European Union Commission and there is NATO, both in Brussels, next to one another. NATO had faded. The war in Ukraine has given it a new lease of life. And essentially, NATO has been making decisions that have been undermining and overbearing vis-à-vis the European Union. Ursula von der Leyen is the apotheosis of this takeover of the European Union by NATO. Ursula von der Leyen, the president of the Commission, even though she's German, she's working for the United States. She is a plant by the United States of America. I'm using a very harsh term, but let's be honest with one another. She's there on instructions of the United States. You can see that because the European Union has always been based on the Franco-German axis, on the axis between Germany and France. This axis, this nexus between France and Germany were always the skeleton on which the rest of the European Union was hanging. And yet, neither President Macron of France nor Chancellor Scholz of Germany were in favor of this rabid anti-Chinese line. This was purely the United States. And the United States has been pushing this anti-Chinese line initially through Eastern European countries that used to be part of the Soviet Empire and which are very anti-Russian and have always been closer to Washington than Brussels, even though they were members of the European Union. Countries like Poland, the Baltic states like Estonia, Lithuania, Latvia, the Czech Republic. Brussels now has been subsumed into NATO as a result of the Ukrainian war. The Chancellor of Germany, Mr. Scholz, he was here recently trying to create a good working relationship with the Chinese, but not being led to do this by Brussels, by the European Commission, which is a complete no-brainer why it's happening. You have to see what's happening with electric vehicles. Because electric vehicles are the future, we know that. It is clear that they are the future. And it is a future which is highly problematic for Europe. Why? That's going many years before the Ukraine war, mishandled the Euro crisis. We ended up with 15 years of no investment. Take the German car industry, which was the dominant industry worldwide. It skipped an industrial revolution. Because going from the petrol or the diesel engine car to the electric vehicle, it's a bit like going from typewriters to personal computers. being good at one thing doesn't mean you will be good at the other thing. Similarly, that's how harsh the distinction between conventional cars, traditional cars, and electric vehicles is. And Germany never made the investment into electric vehicles. They are producing a lot of them now, but most of that uses Chinese technology. So take Volkswagen, for instance. Does Volkswagen want these huge tariffs on Chinese electric vehicles? Our media say that they do, because that's how they protect themselves from Chinese competition. It's not true. I've spoken to people of Volkswagen. They have a shortage of engineers. They want their engineers to be trained in China. They are they are employing thousands of engineers here in China in order to improve their capacity to produce electric vehicles in Germany. They do not want, the people in Volkswagen do not want a trade war with China. If China reciprocates the tariffs against Chinese companies with tariffs on Mercedes-Benz, Mercedes-Benz is going to have a serious problem because of it will be losing a large chunk of its Chinese market. So the German chancellor does not want these tariffs on electric vehicles. The Spanish government doesn't want it. The French government is neither here nor there. And yet the European Commission is pushing this line because it is in the pockets of the United States. This is a tragedy we have, and I say this with a great deal of pain in my heart as a European. This is a tragedy of Europe, that we are no longer in control of the policies that should be serving European interests. Europe is shooting itself in the foot.
Let's now move on to the second part of the global arena with Charles Liu, a senior fellow at the Taihe Institute. The first part of his submission covers the meeting of China and the Arab League states, which is significant because it comes on the back of a meeting in Yemen between China and the Gulf Cooperation Council.
I think most people will be very interested to know what the commercial ramifications are of President Xi's speech to the Arab League countries in terms of future cooperation. His first focus was on how to give vitality to innovation in various sectors like life sciences, AI, green technologies, and so on, to creation of 10 joint laboratories, including the possibilities of collaborating on space and other innovative or new leading technologies that would be beneficial to the next generation and future generations of China and Arab League countries. I think this is significant because this comes on the heel of Belt and Road First Decade. Belt and Road First Decade was really on building infrastructure, and very significant progress has been made for Belt and Road countries, including the Arab countries, in building the infrastructure that's required to advance their technology development and economic development. So what we have now is actually Belt and Road version 2.0, which is more advanced infrastructure, including digital infrastructure. And of course, the basis has been laid for co-scientific development in these other sectors as well, including life sciences, which is very, very important and which has been very dominated by the developed countries over the centuries. The second area of enhanced cooperation is actually very important tools to be provided for joint development and joint progress, and that is the accelerated and expanded collaboration in finance. This includes many things, one of which is, of course, the use of local currency in settlement of trade, which increases efficiency in trade as well as increases or lowers the cost of transactions. And included in this are several things. I think it is significant to note that the issuance of panda bonds is included in the offer to the Arab countries. What are panda bonds? Panda bonds are bonds issued through financial institutions, either international or domestically Chinese, issued by foreign countries or foreign corporates, and so on and so forth. This is very significant because 6 months ago I spoke to a number of senior members or government members of Arab League countries about the fact that if they're facing budget deficit and they have to issue bonds, they've been issuing them in U.S. dollars which is 6% interest at least, if not higher. But if they issued RMB bonds, interest rate could be as low as 2-point-something%. So more than half is saved in terms of interest payment if it's done in RMB. Why is that? Because right now, the RMB pool of liquidity sitting in Chinese banks, coming from savings of the Chinese people, are so massive. It's the largest pool of untapped liquidity in the world today. And given the fact that in order to address inflation, U.S. has been raising interest rates left and right, and they talked about lowering rates, but still have not done so, and probably will not done so immediately. So you end up with a situation in which the cost of borrowing in dollars is significantly higher than borrowing in RMB. For China, of course, it's good, because if it's bonds issued in RMB, the recipient will receive RMB, and will end up using the RMB to buy services and equipment and construction and machinery and industrialization, and buy these services and goods from China with the RMB that they accumulate. So it's actually beneficial for both sides. China gets to export some of its goods and services, and the borrowing party from the Arab countries will end up with very significant savings in interest rate and also direct access to a very large liquidity pool. The finance side has also welcomed financial institutions of the Arab League countries to join the CHIPS, which is the Chinese settlement system, and then also to jointly develop, to collaborate in the development of digital currency. China has become quite well versed in the digital currency side and has become quite advanced in this sector and can be helpful on the technology side and the practice side for Arab countries that will be interested in moving in this direction. Whether or not you're interested in moving in this direction, I think this will be applied more broadly internationally soon, and it's already beginning to happen. The third area of enhanced collaboration is in the energy sector. We know that 50% of China's oil and gas imports now come from the Middle East. But it's not just a question of commodities. It's a question of enhancing the value for both sides. In this context, Saudi Arabia is already beginning to move heavily into petrochemical process industrial side in both China and Saudi Arabia. So what's shipped out is not simply raw oil and could be further value-added refined products. At the same time, given the fact that China is a major user for petrochemicals, significant investments have already been made by Saudi Aramco, SABIC, and so on to develop and build refineries in China. We've seen a number of very large projects starting in China, and I could see similar development in other countries in the Middle East, with Chinese capital, with China also being the end user or the buyer of the end product. The other side that's significant in this is new and renewable sources of energy. The Middle East is filled with wonderful sunshine, sometimes a little too much. Certainly, solar and wind can be had at very low cost, given the advances in technology and the scale of production which had been accumulated in China. The efficiencies of scale is now reaching incredible levels in creating really economies that will be very much cheaper than other conventional sources of energy. And in this context, on the commercial side, Chinese government will support Chinese enterprises working with Arabic countries and enterprises in increasing new and renewable sources of energy by at least 3 gigawatts. And that's significant because that will be very, very helpful for many of the smaller countries that don't have the capacity to really do it themselves. And China's experience, scale, and also its productive efficiencies will make this very meaningful for countries in the Arab League, for the Arab countries in general. In addition, there's a commitment for 3 billion RMB to be used by the Chinese government to support this movement or this development of how to import more from the Arab countries to create a more balanced trade flow. and including a commitment to import more agricultural product from the Arab countries, which is currently a very significant portion of their export, in addition to energy sources. So this would be very helpful for the farmers in the Arab countries if China buys more of its agricultural produce. The fifth area is people-to-people exchange, cultural exchange. I remember doing a program a couple of days ago about how UAE is now at over 70,000 children learning Chinese in 171 schools. And the same thing is now happening in Saudi Arabia, where students are required to take 2 Chinese courses per week. And this will enhance the possibility of better communication and exchange between those countries and China. There is now a commitment to strive to achieve 10 million mutual visits between China and Arab countries over the course of the next 5 years. Now, I think this may be a very ambitious target to achieve, but certainly achievable. So it's really moving in a very quick direction. And I think these exchanges, plus the exchanges of commitment, China to invite hundreds of Arab League country officials, government officials to visit China, will also help in enhancing mutual understanding and exploring other areas of collaboration which may not have been covered so far. China is a very big country with a big economy, and there are many opportunities for Arab countries to collaborate with Chinese enterprises. So you have inbound and outbound. I think this is good for both sides. This is good for all.
And that's all for the first part of his submission. The second part will focus on India and will answer questions on whether or not India can actually succeed in achieving the goal of becoming the world's third largest economy, which it has set for itself within the next several years. This is most definitely a topic that the whole world is interested in finding out. So let's keep watching to see what's for the segment.
People are looking at the ambitions of India to become the third largest economy in the world within the next several years. India has experienced significant growth in the last decade or so. It had very good GDP growth numbers. It also had expansion of its various economic sectors to the point where India now is feeling confident that it could catch up and become the third largest economy. This is significant for China as well, because India always compares itself in competition with China. And this is for good reason, because China, like India, has a very large population and have been a developing country. What is really very interesting to look at is what happened over the last 40 years ago. Per capita GDP of India is the same as China. I think it was $1 difference or something like that. It's really parallel. But in 40 years, the per capita GDP of China is now 5 times that of India. What did China do and what did India do, or what India did not do, becomes a big subject of debate. Why has China been able to do it and India has not, despite the fact that the Western countries are very, very keen on promoting India as a counterweight or counterbalance to China? They describe India as the largest democratic nation in the world in terms of population. We look at this and make a comparison. What did China do after the success of the revolution? The People's Republic of China focused on education, focused on infrastructure, focused on building supply chain. It went from selling 10 million T-shirts to exchange for buying a Boeing jet to the high-value output that it enjoys today. India, looking at what happened in China, is very keen to try to catch up. I think China and India has to get along. They're neighbors, and that they're both very large population and share a very long border, and both are in Asia, and both could play a significant role in the global south. But this would not happen, it would not be successful if one or the other country takes an antagonistic view or a negatively competitive view of the other. I don't think it's really in the benefit of India. I don't know if it's just the Western press which is promoting the competition between the two, or Indian press also bashing China like the West. What we have is a situation in which India takes China as a target of competition in a very negative way. I think what may be necessary is to have much more exchange between India and China in terms of people-to-people exchange, as well as academics, as well as media, to really get a feel of how the two can collaborate and cooperate. Because many people who visited China from India are shocked by what they saw. This is not what Indian media portrays. India has a lot of issues to address. China had an expression: to get wealth, you have to build a road first. Without building a road, without transportation, without infrastructure, you cannot develop. India, nearly half of its population does not have stable electricity supply. India, in terms of infrastructure, the railway systems were built a century ago. India has also serious issues to deal with in terms of the population mix. The simple fact that India has a very large mix of various religious groups, various nationalities, and so on and so forth, are all issues that have to be addressed. And then in terms of literacy, India's level of literacy is considerably lower than that of China. Without addressing these issues in terms of education, in terms of infrastructure, in terms of the mix, in terms of nationalities in the population and religion, without addressing these issues, it's going to be very, very difficult for India to actually move quickly to the front ranks of the global countries. Then how do you address these issues? How can they be addressed quickly and effectively? You need a very, very strong central government, very, very strategic planners and leaders, people who would look in the long term of addressing problems with strategic solutions. We certainly hope, sitting here in China, that India develops well and does not regard China as a competitive enemy. We certainly hope that there could be closer collaboration on the economic side and also on the geopolitical side, in which India can join with others in the global south through entities like the BRIC countries to effectively promote collaboration among the countries of the global south, to raise the level of standard of living of its own people, but also for the rest of the world, as China has tried to do with Belt and Road and globalization and the spreading of supply chain. Countries have become much more efficient and effective, integrated global economy. I think India has been seen over the course of the last 5-6 years as really seeking to benefit only itself. The business environment has been quite negative for a number of Chinese companies who have invested in India. And this is not only Chinese companies, but I think companies from other countries as well. So for India, I think should look at improving the business environment, should focus its effort on building infrastructure, should focus its attention on enhancing the education system so that the human resources pool is further enriched, should do all of this in a positive and inclusive way, no matter what religion, no matter what nationality the populace may come from. There should be a unified effort. And some of the traditional problems that still exist today, like the caste system and so on, these issues have to be addressed, because without modernization, you really can't have industrialization. And modernization means social and cultural modernization as well. So we hope for the best for them and for the Indian people.
And here's where we draw the curtains this morning. We hope you found our coverage insightful and that it helps you navigate the week ahead. Remember, The conversation doesn't stop here. Follow us on social media and share your thoughts on today's topics through the email provided below. I am Makiza Latifa, and it has been a pleasure bringing you the news that matters here on China Now. Until next Saturday, stay informed, stay engaged, and let China not be far away from you anymore.